Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's November 10th. Want to say thank you to all the vets out there. Want to show my happy Vets Day tomorrow. Want to say again, give you my sincerest gratitude for everything you guys done, your sacrifices, your support, protecting us and serving us. Wanted to say you guys deserve all the accolades that you guys ever received, and just want to say thank you and give you my sincerest appreciation. So let's kind of jump right into this. We'll start off with the economic calendar, and the first item here is the consumer sentiment. Of course, it's the only item here. As we had mentioned all week, this is a really light news week. We had a previous reporting of a 100.7. Forecast is supposed to be the main. This is the initial one. We did get a final one towards the end of the month, but this one dipped below 97.8. So this is the first time we've had a drop below 100 in some time. So this is kind of obviously going to be a little disappointing to the markets. So let's take a look here. The stock market's down, but it's not really taking its cue so much from the consumer sentiment. We do got some earnings reports, but again, it's kind of like yesterday. It's taking its cue from the tax reform. We had the House come out with their version, and we had the Senate come out with their version, and it's putting basically a water on a wet blanket on the fire. And again, they're just investors getting really dissatisfied in the sense that they think this could be another delay because they're each plan is a bit off from the other, and they just don't see this being done before end of the year. And one of the things that they are concerned about also is the Senate plan. The Senate plan has corporate taxes not going from 35 to 20% immediately, like in 2018, like the House bill. They have it actually starting in being delayed in 2019. So this is something that's of concern to them too. They don't want this obviously being delayed another year. And the whole reason of the stocks market's been rising so rapidly is because they were optimistic about a tax bill being released and everything, and having these large corporate tax returns or taxes being reduced. And the sooner the better, obviously. So this is why the stock market is down, and if all three indexes remain down for the rest of the day, this will be the first. This will be cutting multi-week highs that they've had, and some of these multi-week highs haven't been seen in quite some time, since at least 10 years, 20 years in some cases. So again, these will be this unless there's any new news on the tax reform and we're getting any closer, the stock market's not liking it very much. Let's take a look here at the bond market, and the bond market's not liking it very much. We had a huge yesterday, only actually closed down 9 basis points, but because we had the bond rollover, it ended up being 22 basis points loss. But when in reality it was 9 basis points. So we kind of take this with a grain of salt, primarily because what happened when we talk about these bond rollovers, it's kind of there's no pricing change in there for it doesn't affect the rates. So what happens is that they're bundling these up on these 30 days as I think you probably heard me talk about this before. They package these up on a 30-day basis, so that's why we have 30-day locks. And they package them up and they kind of reset. So it's recalibrating the pricing on the bonds, and it's just starting over. But today, from here, we're down another 22 basis points. And right now, because we're past all these indexes or these moving day averages, our next free fall really could be probably down here. This support probably is not going to be much of a support, as we've seen here, and we probably won't get much support until we get lower. So be cautious again. This is again, unfortunately, we could see worse pricing in the near future before we get better again. Now, could it go up again? Yes, it could, but we may not see this happening anytime within the next week or two. All right, so let's take a look here at the yields. And out of England, or out of Europe, there was talk between the ECB and Germany of finance, saying that they're gonna have to put some type of end time frame on their quantitative easing, and that's also going on a global level. Yields rising. So right now, this yield is up about 6 basis points. It's up against this resistance level, and again, if it goes above there, we could see more room for it. So this has been pretty tough, but again, if it breaks above it, and it could be a little longer until we see good rates again. Or I mean, not that rates are bad now, but it would be until they improve again. So again, this would be a strong floor if it could stay above that. Again, it gives more room for more rate for rates to rise. All right, so hopefully I got that out clearly. I apologize. Looking forward to the weekend, and it's Friday. So, anyways, to wrap it up, rates are higher today. And if you guys want to get more updates, just come over to Twitter under my handle, Mike Bjork. I do post updates throughout the day. And again, I want to wish all those vets a happy Veterans Day tomorrow. Take care and enjoy your weekend. Bye bye.